By removing the link between gold and the US dollar, President Nixon created a system where all currencies were backed by nothing. This is what is known as a fiat currency.
Fiat currency is currency that's backed by nothing except government promises. The word fiat is a Latin word, and it basically means currency that's circulating by force. If people have confidence in that currency, and if there's enough government force, that will enable the currency to circulate for a period of time until people lose confidence in the currency.
There is no nation on this planet that currently uses money. We all use currency.
With currencies no longer backed by anything real or tangible, their value was measured only in relation to each other. And because countries with relatively weak currencies can make products cheaply, countries devalue their own currencies to make them desirable trading partners.
Every paper currency measures itself against the dollar. So if the dollar goes down, the other central banks respond to that, and they try and intervene in the foreign exchange markets to ensure that the impact doesn't hit their domestic economies.
Without a fixed link to gold, the U.S. Treasury has been able to borrow and spend as much money as it wanted. When the U.S. government needs money, it takes out a loan with the Federal Reserve. The Federal Reserve prints the currency required for the loan, and in return receives an IOU from the U.S. Treasury. These IOUs are called government bonds. With the money provided from these loans, or bonds, the U.S. government pays its bills and obligations. Meanwhile, the U.S. Treasury and the Federal Reserve work closely together to sell these bonds at auction, where foreign central banks, pension funds, and even individuals buy these U.S. government loans. And why wouldn't they? Loaning money to the U.S. government is virtually a risk-free investment. But if the loans are spent on bills and paying off previous loans, where does the government get the money to pay back the current loan and the interest that is charged on it? Is investing in a U.S. government bond simply one small part in a giant Ponzi scheme?
If you borrow the very first dollar into existence, and that's the only dollar that exists on the planet, but you promise to pay it back plus another dollar's worth of interest, where do you get the second dollar? The answer is you have to borrow that. It's a Ponzi scheme because you can never pay it off. It always requires that we go deeper into debt.
Since 1971, the United States has been running trade deficits with the rest of the world, meaning we've been buying a lot more products from the rest of the world than they have been buying from us. The Japanese and Koreans sell us cars and electronics. The Middle East sells us oil. And the Chinese sell us seemingly everything on our Walmart shelves. The U.S. pays for these products with U.S. dollars, and everyone is happy. But if countries were to convert these U.S. dollar profits back into their own currencies would rise in value, making their economies less desirable to trade with. Instead, countries invest their dollar profits by buying U.S. government bonds. So countries around the world sell their goods to the U.S. in exchange for U.S. dollars, which have been borrowed through the Federal Reserve, creating IOUs. And countries then loan their U.S. dollar profits back to the U.S. by buying more IOUs.